Sure.
If you were to approach this for the first time in this market, how would you screen from, let's say, the 500 instruments available to a few that you want to dig deeper into?
So, first of all, before going into the stocks, I would determine which indicators I want to use, right? Because there are so many indicators out there, and I really believe that indicators pretty much say the same thing but in different languages. So, it depends upon you which language you're comfortable with. So, first select the indicator and then start analyzing that indicator across the stocks. There are not too many stocks, right? I mean, sure, there are 500. It'll take you a little bit of time to cover all of them, but then again, you don't have to participate in all of them. You just need to because your capital is very limited. So say you want to allocate even 10% of the capital to each stock, or even if you want to participate more and allocate 5% to each stock, or say have a strategy based on market cap, that for large cap stocks you'll allocate say 5 to 10%, and for mid cap stocks you might want to allocate 3 to 5%. For small cap stock you might want to allocate 1 to 2%, because the volatility and the risk factor. Then
Right.
so after determining, so first of all set your rules out, which indicator you're going to use, what's going to be your allocation strategy, what is the minimum risk reward ratio that you're going to play with. I personally do not participate in a trade unless it is giving me a risk to reward ratio of 3. And trust me, no matter the kind of market, there is always opportunity. You just have to look for it. In some market conditions, you have to look really hard. In some market conditions, when the market is bottoming out really well, there's just a flood of opportunities and you don't know what to do. But then all you have to do is trade. So in this market condition, again, once you've selected which indicator you want to use, start scanning the stocks without using screeners or scanners. Do it with your own eyes. Get a feel of all the stocks, and then start looking for positive signals, early positive signals. Set a criteria for confirmation and then go into participation. Or look for stocks which have given a signal 2 weeks, 3 weeks, or a month behind and have now reached the stage of confirmation and are ready to move. For every kind of
Right.
stock, before they move, there is always a preparation phase. We do see some V shape or very sharp turnarounds in the market, but they're very rare. So don't lose your spirit if you were waiting for confirmation on a stock and it moves really fast. Because of that missed opportunity, don't go forward and make a couple of mistakes on buying other stocks before confirmation
Right.
because of the
Right.
fear of missing out. This is a very common mistake in the market, and people lose more money because of fear than because of proper or improper allocation.